Charles, Andrew, welcome to the show and thank you for taking the time to be with us today. I'm your host, Gaetan, and head of protocol at Blockdaemon. And before we start discussing the topic of today and how we see the future of DeFi through the dYdX project, can I ask you both to introduce yourself and your organization? We can start with you, Charles.
Sure. So I'm Charles. I'm the CEO of the dYdX Foundation. dYdX is a decentralized finance protocol. We are focusing on the largest market in crypto, which is a crypto derivative market. We exist since 2017. We launched the dYdX chain about 6 months ago now. And dYdX protocol hosts about $1 billion of trading volumes daily. Within the foundation, we have a team which is distributed in 10 different countries, and we focus on the ecosystem growth. We focus on decentralized governance. We focus on go-to-market, but we will surely touch on those points later on. Great to be here.
Thank you so much. Andrew?
Yeah, hey, I'm Andrew. I'm the Senior Director of Blockchain Engineering at Blockdaemon. So I've been in the space around a decade and in Blockdaemon since 2018 when we were quite a small startup. Blockdaemon is an infrastructure provider and we deploy, validators and RPC nodes and data products and wallets pretty much globally. And, I would have been very instrumental in building out that platform in the early years, onboarded many protocols myself from Genesis. And now I'm currently working in an innovation team, actually looking at, on-chain activity, DeFi, so on and so forth. So looking forward to the conversation and interested to see, how we get on.
Awesome. Okay, so actually, before we dive into the topic and the questions, I wanted to set the stage a little bit, give some very high-level statistics and data. So I have a couple of slides to share, and hopefully that will work out with the recording. But around tradings and adoption and all of that, it's going to be very brief, but I think it can help kind of frame the discussions and help people understand high-level figures around DeFi and TradFi. So the first slide was a couple of statistics around daily tradings of interest rate and FX derivatives. And so you see very quickly, it's very high volumes, above 10 trillions a day, that is exchanged every day. And that these are statistics from the BIS, by the way, the Bank for International Settlements. If we look at daily DEX's trading, it's about 0.1% of that. And all of a sudden realize off-chain versus on-chain, there is a tremendous potential to bring some of these trades and bring efficiencies on-chains. Here we're looking at 5-6 billion. Also interesting to see the maturity, right? Like DEX's volumes have started around 2020 to start to pick up. So the industry is still nascent, and again, like it tells a story around what is to come. Couple more slides. The other one is adoptions in terms of users, and to say that this is not reserved to a few people here and there, a few trading firms here and there. It's actually millions of users today, and that growth has been exponential in the past, 3-4 years, and most likely the projection can be flat the way we see it here, but it can also be a lot higher. So again, it speaks to the potential of DeFi. Now, the last slide that I wanted to show, it's an interesting one from Pantera. Some investors have this kind of thesis for 2024, 2025 around the fact that the market in the past has seen huge adoptions, huge growth in terms of volumes, and yet there's been a lot of major incidents happening. And so the fact that the industry is maturing and can maybe have less dramatic incidents like the FTX collapse or a lot of the other events that are here can help a lot just the industry, again, be more resilient and foster the growth of DeFi overall. So I'll stop sharing here and I'll jump right into the questions. But hopefully this few statistics helps set the stage and kind of show the enormous potential for DeFi growth. Okay, so Charles, going back to you, dYdX is one of the most successful stories in decentralized technology with a very specific use case that you highlighted, trading of derivatives. Can you tell us more about the journey of the trading platforms, of the project of dYdX, and what have you guys put in place to ensure that the technology works as it should?
Absolutely. dYdX was founded in 2017 by Antonio Giuliano. which left Coinbase, the centralized exchange everyone knows nowadays, to start his own project, dYdX. So dYdX started on the Ethereum mainnet blockchain. Later on, it was one of the very, very early users of layer 2. They are very popular today, but back in the days when dYdX found that there was some kind of limitations with the mainnet, the gas fees were kind of challenging the experience for traders. The engineering team has been very bold and trying to be as agnostic in terms of technology and really thinking of the experience for the traders rather than focusing on one blockchain only. So very early user of layer 2 with Starknet, and then there was still some kind of limitations with layer 2s. I think the community and the dYdX team at the time really went through some deep thinking, do you want to be sitting in centralized finance? Do you want to be sitting in DeFi? If you need to choose a destiny or a journey, you need to be very clear and opinionated about where you want to go. And sitting on a layer 2 for dYdX at the time was meaning that there was only so much which was truly decentralized. So the identity was kind of still information. And a decision was made probably back in 2021 or 2022 to essentially keep going in further in terms of decentralization and having a product which was really totally independent in terms of stack, and that's where the dYdX chain came to the surface. So the dYdX chain is essentially a blockchain which has been launched in 2023 December, and is dedicated to dYdX only. So it's supported by 60 active validators, and it's essentially a blockchain which is really optimized for the use case of dYdX. So as I mentioned earlier, dYdX focuses on the world's largest market in crypto. It's not spot, it's derivative. Derivative crypto is 10x larger in average than the spot market. And the advantage to have this dYdX chain now, it means for the protocol that the full stack is actually optimized for this very precise use case. Maybe one last thing I will say is dYdX has been, as I mentioned earlier, very opinionated about its identity. We are building together with many co-builders a DeFi protocol, and we don't want to be sitting between two different things. And also, I think the history of dYdX illustrates that it's very product focused and application layer focused, being agnostic of so our industry is sometimes a little bit tribal. The Bitcoin people stay together. If you were born on Ethereum, you should stay on Ethereum. I think we are one of the case studies probably illustrating that we are an application before being a blockchain, and this application essentially has been kind of upgrading constantly the software around the application, the same way the web services we are using today will be upgrading databases, upgrading software to improve the experience for their users, and really thinking from the user and from the application layer rather than from the bottom up from the blockchain. And as I mentioned today, we are the world's largest protocol today in terms of decentralized finance for crypto derivative. This industry of crypto derivative represents trillions of dollars, obviously. There is only 1 to 2% today of crypto derivative being traded on decentralized exchanges. And we definitely are very confident and optimistic that this trend will be evolving very quickly. Why is this optimism? If you look at the spot market in crypto trading, essentially some years ago, a young startup called Uniswap started from zero, and today Uniswap in the spot trading industry represents between 10 to 15% of the global spot trading. If you put together centralized exchanges and DeFi, Uniswap represents 10 to 15%. There is no reason why the crypto derivative market will not evolve the same way. So today only 2% of crypto derivative are essentially traded on chain, and I'm personally very optimistic that we will see this kind of momentum evolving quickly to 10-15%. For me, the history is written. We just have to go through chapters one after another and keep building.
Awesome. Thank you so much. And Andrew, you've been a witness of dYdX for a long time, and I know you follow the protocol very closely. From an operator standpoint, Blockdaemon standpoint, being a node, a validator operators for really large institutions, what does that mean to support the dYdX chains today?
Yeah, so if you think about blockchain technology, everything really starts at the node layer. So it's something that Blockdaemon have been doing for over a decade. Over half a decade, deploying blockchain networks. And from Blockdaemon's perspective, one thing we really look to when we try to onboard a blockchain is it a mature tech stack that it's built on? And with reference to dYdX, they've gone through multiple different iterations, as Charles said, and it's kind of interesting to see the evolution from the application to the blockchain, the blockchain node. So for us, onboarding blockchain nodes is kind of our bread and butter, but it's not just about the node, right? That's just the starting piece. So when we talk about validation, right, we need to have a system that's robust and secure and compliant. But also, we need to be able to be versatile with that stack. So we potentially need to move to a particular jurisdiction, or we need specific hardware. So something that that's what Blockdaemon have been doing for quite a while. It's really interesting when you start to think about all of the layers of the stack. It's easy to run one node, right? But when you run 10 nodes or 20 nodes or 100 nodes, it gets much more challenging. And in that scenario, you need to start building peripheral tooling, so like monitoring agents, alerting systems, dashboards, data indexing, and all of the kind of things that actually more interface at the application layer rather than at the blockchain layer. So when we think about institutional clients, they really look for they kind of come with a checklist of criteria that they expect to see. They want to see are you ISO certified? Do you have global SRE teams who can react on demand to these global networks that are essentially running 24/7. So yeah, for us, it's tooling that we've built up over a number of years. We've been able to productionize many of the systems that we deploy, and our team is basically scaled globally to give the institutional clients that we support the confidence to delegate to a validator such as a Blockdaemon validator.
Awesome.
I think for us, Gaetan, to build on this, what is very interesting for us as project and as blockchain itself, it's very interesting to see how the industry of validators is actually growing and maturing at tremendous pace. We've seen the world of blockchain starting with Bitcoin, with miners operating out of their own apartment, and later they're starting to industrialize this, and now you see like very large Bitcoin miners. And there is exactly the same trend, and I think Blockdaemon illustrates this very elegantly, where the early days of proof of stake blockchains were operated by small teams with a lot of passion, but like limited resources. And nowadays, you see really this industry scaling up and having some teams which are very large, very sophisticated, very specialized, and being able to operate following the sun 365 days a year. And it's really very impressive for us to see that within the active set of validators, we start to see more and more very professional teams in the infrastructure part of the industry, such as Blockdaemon.
Absolutely. Moving on to the next section around adoption of DeFi, and I think it's interesting to see the state currently and some of the statistics that you mentioned, and also the one that I were showing in the slides previously. I'm sort of curious to understand what maybe is still missing today, if anything, from a product standpoint or infrastructure standpoint to drive that adoptions. And I do remember that you had mentioned in previous interviews things around the fact that DeFi could become the back end of traditional finance, so banks, centralized exchanges, and which we've seen with players like Coinbase with the Earn program, etc. And so, is that the missing piece today? Closer ties between TradFi and CeFi, or do you see something else?
It's a very long journey. Renovating finance, renovating infrastructure for finance, and having the internet evolving into what we call the Web3, which is an internet integrating the blockchain technology. The same way banking has been evolving step by step, Everyone used to go to the branches of a bank and doing transactions over the counter. No one goes to a bank anymore, or very seldomly. The banks have been embracing the internet now, and everything is happening behind a screen, and you trade stocks and you manage your credit card and all these things via the traditional internet. If you look carefully, there is many different bits and pieces which are getting in place, and I think the puzzle is really getting more clear as far as we are progressing. We see central banks, for example, starting to deploy CBDCs, central bank digital currencies, which are leveraging blockchain technology. We see, for example, the crypto assets being kind of blessed by regulators in a way via the Bitcoin ETF. There is still many things which needs to be clarified, but this is definitely progressing very, very quickly. It takes probably, I would not say generations, but we need to think in kind of trenches of 3 to 5 years to let each different wave of the innovation within crypto to kind of reach the market. Out of Asia, we see adoptions much faster than in legacy markets. Legacy markets are functional today to a certain extent, so they don't have an emergency to change. Payments in the US or payment in Europe are working. They can be working better, but there is no emergency to kind of upgrade them. If you look at new markets where they can build the infrastructure today, they're definitely embracing this kind of new rails. What is missing today for I would say decentralized finance adoption is probably just better regulations, the official launch of CBDCs together with stablecoins. And I think people will not even realize they will be using DeFi. And I believe one way DeFi will really jump in terms of user adoptions will be when traditional finance user will essentially renovate their backend and essentially starting to operate on the top of blockchain or partially on top of blockchain. So this is why I believe banks or centralized crypto exchanges will start to be a gateway to decentralized finance, and hopefully they will do it such elegantly that users will not even realize, and suddenly you will want to pay in US dollar or euros or any currency, and you will be using blockchain, you will be using crypto, but in such a way that you don't have to go and get a special wallet or manage some private keys and all these complexities. And again, we've seen that some years ago with the internet. It's a long journey, but it's definitely adopted already by large governments. Regulators are making a lot of progress in many jurisdictions in giving clarity to the industry. And it allows essentially a finance working 24/7, much more efficiently. Beyond the crypto ETF from BlackRock and some others, we see also a lot of funds being tokenized. So there is really some very exciting news happening all around us, and the numbers you shared earlier in these conversations are showing us that the growth is definitely solid and progressing, even though sometimes our industry is a little bit noisy with some companies busting or some regulations which are a little bit moving around. It's definitely progressing in a very solid way.
Absolutely. You touch on an interesting point, and I want to turn to Andrew for that, around the professionalization of infrastructure. Andrew, can you tell us maybe sort of the journey of Blockdaemon in terms of becoming professionalized and how that can impact the next 3 to 5 years, the next wave of DeFi adoptions in general?
Yeah, sure. Yeah, so from my perspective, I think kind of building on what Charles said about, dYdX moving from, smart contracts on Ethereum to a layer 2 to, its full chain. I think, this is kind of the trend that we may see with some of the financial institutions that exist. They have existing products. They've existed for some time. They're probably built on layers and layers of, data technology that's hard to change. And blockchain could offer them, an opportunity to basically take a lot of that activity, tokenize it, and bring it onto a blockchain that is, essentially interoperable or able to move at a much quicker speed, backed by the power of cryptography and distributed networks. So I think it's a trend that we're going to see. I think we're starting to see it with centralized exchanges. Many of them are looking at launching L2s or have launched L2s, and some part of their business is essentially going to move on chain. And I guess finally, as a user of blockchain technology from, for the last decade, I've seen the shift from centralized exchanges to applications that kind of mirror the functionality of a centralized service on chain. And I've been tracking that and using these systems, and it's very easy to just transact on chain, move assets around, go on Uniswap and trade, do some perpetual DEX activity. And I think that trend is coming, and I think it's increasing, and the quality of projects are getting better and better as every year.
Absolutely, yeah. Actually, building on that and the quality of projects, there is a big piece of the dYdX projects that revolves around the DAO. Charles, could you talk to us a bit more about what the DAO is and what is function at the center of the dYdX project?
Absolutely. So essentially, DAO stands for Decentralized Autonomous Organization. So think of an LLC or a limited company, depending where you're from, but really in a blockchain or kind of internet native way. So the DAO is essentially built and run jointly by the token holders of dYdX chain. So the dYdX token holders. And they essentially self-organize around different work streams and committees and run some operations. Some others are running grants to help people building on the top of the dYdX blockchain. And there is different votes which can be done on chain, where essentially all the token holders and users of the dYdX protocol can express themselves and decide how things are going and in which direction. So since the kind of genesis from the dYdX blockchain back in December, there has been about 54 different proposals made to the dYdX DAO and the dYdX token holders, and they've been voting on adding new trading markets. They've been voting on upgrading the software. They've been voting on financing specific projects. So there is all kind of conversations which are running around the DAO. And that's a way essentially to build resilience. And it's a very, very unique way to essentially illustrate what the new generation of internet is. Alignment between the users, potentially those users will be token holders as well, and the protocol itself. And essentially, it gives the opportunity for token holders and users to express their opinion on what should be the direction of the project, what should be happening with the product. So it's something very new and really empowering the users into the, I would say, the life cycle of the protocol they are using. So today within dYdX there is about 2 DAOs. They represent more or less more than 500 people which are working directly, indirectly, full-time or not full-time within the ecosystem. And the DAOs are essentially the platform for these co-builders of the protocol to express themselves, to get funding, or to decide on the direction of the protocol. Today, out of these 2 DAOs, they focus on operations and grants, and the community might decide to expand the DAOs or new sub-DAOs into other topics. So it's really some kind of global organization mechanism for the token holders of dYdX to essentially express themselves. And if we come back to the infrastructure, this decentralized governance and this decentralized DAO essentially are leveraging the validators. So when you decide to stake with the validators, for example, with Blockdaemon or some others, essentially you will be able to vote on these different proposals from the protocol. So the last time I checked, there is about 20,000 different delegators using the validators to essentially secure and decide together on the strategic directions of the protocol.
Awesome, thank you. From an operator standpoint, Andrew, we talked about the fact that dYdX moved to the Cosmos ecosystem. What does that represent for you? Did that change anything? How did you operate it?
Yeah, so as I kind of alluded to earlier, in blockchain technology, there's lots of different protocol implementations, right? Some people build something completely net new, other people build on a framework or an SDK that is kind of a toolkit for building a blockchain application. And then it means that the team don't need to focus on, networking and, RPC access. They can just build the application or the components that they need, and they can customize it, right? So the Cosmos SDK is a very powerful toolkit that basically is a collection of modules that you can compose together in the way that you want. That gives you a lot of the underlying blockchain technology for free, and it gives you and your developers time to build just the application you want. Now, from an infrastructure perspective, it's really useful for us because we've been a Cosmos validator since, I think, 2019, and we've built tooling around that. We've tracked the ecosystem as it's evolved. And we've also onboarded many other Cosmos SDK-based proto. When dYdX was onboarded to our platform, it was relatively straightforward for us just to roll it out and get it onto our platform, right? And that's one of the features of kind of being in an ecosystem. You leverage the network effect of all of the other builders in that space, meaning that it's much easier to kind of onboard, support, debug, build, and basically integrate into our platform like Blockdaemons.
Awesome, thank you. Charles, the next sections is around regulations, and I think a lot of our audience are from traditional finance, and regulation is obviously top of mind for them, especially when it comes to decentralized systems. The questions I wanted to ask you is framed by one of the comments that you made in the past, in one of your past speaking opportunities, and you said that you were asked whether DeFi can be regulated, and your response, if I'm not mistaken, was, can the internet be regulated? And your point of view, if I'm not mistaken again, is that the internet was not regulated, the operators were. If that's correct, how do you think operators need to adapt to develop, to support DeFi? And is it more local compliance? Is it closer relations with regulators? What's your view on that?
Absolutely, I stand by what you mentioned here before. You cannot really regulate the technology. We have the same kind of debate. We had the debate 20 years ago with the internet. I think the debate is upcoming with AI, and in crypto, it's still kind of ongoing. Eventually, this technology is global, and there is different ways to consume these new networks depending on your culture, depending on your regulatory environment. But you cannot really regulate this technology. You can try, but essentially you're wasting time and essentially isolating your country from this innovation wave. So it's very important for the industry of crypto in general and decentralized finance to stay engaged with regulators wherever you're from, should it be in the US, in Europe, or Asia, and not only claiming that our technology is better and it should be supported, but really demonstrating that eventually, if you look carefully, the agenda of regulators, which wants to offer healthy markets, transparent markets, consumer protections, and the fundamentals of the technology of blockchain and decentralized finance are definitely overlapping. There is a lot of noise in our industry. There is as much as there is on the internet or traditional finance. Some people are scamming, but the technology itself is extremely aligned and represents the futures of regulation and represents the futures of regulators overall. Every part of the world will implement blockchain in different ways, again, depending on their culture or their requirement. And that's where regulating the technology makes no sense, but regulating the operators is important. And that's where also we come back maybe to these things we were discussing earlier with Andrew, that global public network will probably become the back end of banks, the back end of fintechs. And each of these fintechs, should they be Chinese, Middle Eastern, European, or American, will apply the regulatory requirement from their local jurisdictions. But eventually, they will kind of leverage global pool and global technology. So it's important, as I mentioned earlier, to stay engaged with regulators, to explain what the technology and demonstrate that the goal of regulators is very easily, essentially, implemented and achieved by leveraging this new technology of smart contract and blockchain in general.
Absolutely. Thanks a lot. From your perspective, Andrew, what is your take?
Yeah, I really love the comment about, can you regulate the internet, right? Like I see the same kind of conversation coming. If I put my technology hat on, I agree with Charles, right? Like the technology is global. There's no borders on the internet, essentially. I mean, within reason. And I think, the regulation is kind of looking at probably the financialization of the industry more so than the technology, right? So from the technology, we should keep it kind of neutral, is my opinion. And I agree that the operators or the people who are launching or being the gateway to the chain should have some sort of regulatory compliance for the jurisdiction that they're in. I think in general, the crypto narrative may have, for some previous bad actors be tainted, but the technology is pure, right? Like it works, it functions, the cryptography makes it very easy to understand exactly what happened because it can only prove out one way. So I think, yeah, it's about regulating the operators and making sure that you're compliant. From Blockdaemon's perspective, we're trying to be the adults in the room a lot of the time. We're hesitant to get into things that seem too kind of exotic until it's proven out or that there's clear guidance. Being a US company, we got to abide by all the laws. And we're also a global company, so we do have, jurisdictional laws that we need to adhere to as well. So yeah, we're trying to be very conservative where we need to be, but also the technology is pure, as I said, and we're going to participate in all places that we can.
Thank you. One of the unique aspects of the dYdX project is how traders and validators are incentivized. And so the reward mechanism that goes into the trading platform. Charles, could you tell us a bit more about this unique aspect of the protocol?
Absolutely. So as we mentioned earlier, dYdX is the leading protocol for trading crypto derivative in a decentralized fashion. Crypto derivative is the world's largest market in crypto. When users of dYdX use the protocol and essentially express their opinion on the market, going long, short, or trading any of the derivative contracts on the dYdX protocol, those users are paying fees. Today, 100% of those fees are redistributed to validators and to stakers. So what it means in very concrete terms is that there is an alignment, and when you bring service to the protocol itself, when you help the chain to be secured, when you help the chain and the validators to produce and verify new blocks, you get rewarded for this service. And you get rewarded via the fees paid by the users of the protocol. So when you decide to validate and to essentially be a staker of dYdX token, you will not be rewarded in dYdX token. You will be rewarded in USDCs because the users of the protocol pay trading fees in. So that's a very interesting and very new value proposition where you really see service provided by stakers and validators and rewarded by the fees paid in USDC. So you're not paid into a crypto native, I would say, type of asset, which might have its own inflation. You're paid in, I would say, hard cash, so to say. The US dollar have its own inflation as well, but this is something which is much more under control, I would say. And you're paid directly with the fees. So it's very if you've been a Bitcoin miner or a staker of various protocols, I think experiencing the staking on the dYdX chain really shows you how the chain and the applications are linked and how the alignment kind of illustrate by itself between the service providers, the stakers, the validators, and the success of the chain. Again, there is on dYdX about $1 billion of trading volumes every day. So this represents obviously millions of fees which are distributed to the stakers and validators every day. Last time I checked, there is about $23 million over the past 6 months or so, which has been distributed to stakers and validators on the dYdX chain. So these are very tangible numbers, and these are also the rewards are coming every second to the stakers via each block. The calculation is made, and a portion of the fees in USDC is distributed to stakers and validators.
Thank you. Andrew, from a validator standpoint, what is this unique property represents? What consequence does that have?
Yeah, from an operator's perspective, this is really interesting for us because it's much easier to, be supportive of a chain if, the value that is being generated by validation is not basically eroding with inflation, right? So it removes the burden to essentially kind of chase the inflationary rewards and then potentially have to look for liquidity on those at some point in the future, right? It removes the volatility. It gives us a much more confident, path to success, because it's not based on speculation and timing a market. It's more kind of predictable and accurate, right? So as we see the network grow and the fees grow, the stake that we want to participate in, it kind of grows with that value proposition. So for us, it's a really interesting idea. We genuinely like it, and I think you may see this trend come up in some other networks. Historically, every proof of stake network has launched a token, and there's always been tokenomics games that are hard to determine. We have a whole team of people who look at these numbers and they've seen what works, they've seen what doesn't work, and over time, we've built up kind of a way of working with this. But with dYdX, it's so much simpler. It's easier to explain to everyone in the business. There's a lot of opportunity, and yeah, we really like the fact that there's a dollar denominated asset for the validation services that we run.
Awesome.
Decentralized finance is the most successful use case so far in the world of crypto, and probably one of the only profitable use case in crypto today. So having an exposure to decentralized finance, should it be via security services, via staking on dYdX or some others, is essentially getting an exposure to the new generation of finance and focusing on profitable use cases in crypto.
Yes, thank you so much,
100% agree.
Charles. Yeah, and I know we're at time, so I was just gonna ask if there is any closing remarks and where can we contact you and the projects if we want to, both on the dYdX side with Charles and Blockdaemon with Andrew.
Absolutely. It's always exciting on dYdX. We have a big upgrade coming up with new system of oracles, hundreds of new tradable markets. So we are very excited about this new upgrade, which will be launched on the network with the support of validators. If you want to follow more about the news of dYdX, you can find us on Twitter at dYdX. You can follow the foundations, dYdX Foundation, and yes, get all the updates, get the kind of Pulse dashboards to really understand how dYdX chain evolve and how you can be part of this journey together with us and the ecosystem.
Fantastic.
Awesome.
Yes, yeah. So from Blockdaemon's perspective, we're happy to be part of this journey. We really like the way that dYdX is going, and we're looking forward to the innovations that they're bringing to the DeFi space. If you need to contact Blockdaemon, so blockdaemon.com is our website. You can find all of the different products and services we do, not just staking, but there's quite a lot of other technology stacks that we operate in, and also Twitter. At Twitter, you can look at us at Blockdaemon HQ.
Thank you both so much. Thanks for the time, and we hope to see you soon.